Hello traders, this is Rich from Tradesight. This is the market preview for the coming session. This is going to be for Thursday, July 25th, 2013. We had a fairly sharply bifurcated market today, where we had strength in the Nasdaq side of the market and weakness in the broad market. You can see here that the NQs were up 22 on the day, greatly helped by the performance of Apple following the earnings. But we didn't have broad-based strength across the Nasdaq, and certainly a lot less strength in the S&P and the Dow Jones, which were both lower on the day. A couple key things here today: the advanced declines on the New York side, that's the broad market, were minus about 1,500 issues. And even though the Nasdaq was higher on the day by 22 handles, the overall bias was lower, at least as measured by the market internals, with minus 500 net advances versus decliners. Also, the New York trend clocked in at 0.92, and the VIX was higher on the day by about 50 cents. So let's move on to the major index futures and take a look at what we have here. All right, so here's a look at the ES futures. You can see that just very, very slightly we did make a new high on the move. We did close below yesterday's low, which makes for an outside candle down. So that's definitely a bearish activity here at range high. We're still in the neighborhood of this 8/8 level on the Murray Math box, and still above the 10 EMA. So for now, by definition, we still remain short-term positive, but this is definitely kind of a sloppy-looking candle. The MACD has leveled off here, and it actually has a very slight downward bias. So this could be the precursor to a turn to the downside if we do violate this 10 EMA. So we'll have to stay tuned there. First support's going to be coming in at the 10 EMA or in previous sessions low, which are essentially in the same neighborhood. Then down below that, we've got the 7/8 level at 1671. Of course, this 8/8 level is going to be a magnet, but if we do move up a bit higher, 1703 is the next area of resistance. Moving on to the NQ futures, the NQs on the day were relatively strong versus the broad market, as we had talked about before. We did close up on the day. Here's yesterday's close down here. We did close up on the day and in the top half of the range, so that's a small positive for sure. But the NQs did have some other internal weakness that we'll take a look at in just a little bit. The MACD is threatening to cross to the downside, but hasn't done so. We had a somewhat positive day, so we just kind of leveled off here for now. Key support's going to be the previous day's low, which is coming in at 30.23. Resistance is going to be this multi-day high here at about 30.54, 30.55, and then much more important resistance here at the 7/8 level at 3,086. Now, while we're on the subject of the Nasdaq, the NQs, the NDX, if you will, in the cash version versus the S&P, the SPX, you can see here the SPX has turned down. Nasdaq showed a little bit of strength, which is a positive. We have to make sure that the S&P can arrest this slide to the downside and respond to the Nasdaq strength today. But there's one thing here that that is a little bit worrisome. So let's now take a look at the SOX versus the NDX. Here's the thing that's a little bit concerning. We're starting to see some weakness develop in the SOX versus the NDX. This is the SOX-NDX ratio. If the SOX is relatively weak versus the NDX, we'll see this ratio decline, and that's certainly what happened in this last session. The SOX was very weak and broke this very, very key level. Haven't really been able to build on this this breakout. Let me just switch the chart here to the weekly time frame. You can see the importance of this level. This level was a multi-year breakdown, led to a lot of relative weakness in the NDX. Overall, this is when Apple was very, very weak and not providing any kind of leadership to the market. And certainly, this break back above that was very welcome, but the SOX really hasn't been able to build on that. In fact, we're threatening to lose that key level again here with relative weakness developing in the SOX. The reason this is important is because certain sectors tend to lead averages, and the SOX tends to lead the NDX. We saw the weakness develop very early in 2012, and certainly that was manifested here, and you saw some of that in the averages, while the averages struggled under the weight of Apple, and now we're starting to see that to develop again. So definitely keep an eye on this chart. All right, so here's a look at the cumulative advanced decline lines. NASDAQ side did push up above. This is a key support level here, which it broke and then recaptured, broke it again and kind of recaptured it again. Now we're back down to that line. We're starting to lose momentum. This is definitely something that we want to be on top of. This is something that could eventually turn the market lower, and it definitely should be monitored, especially since the advanced declines tend to lead the overall market. The broad market has lost its level of support and has not been able to regain it, and is threatening to turn back down again. If you recall, as we talked about in the beginning of the report, the advanced declines were negative on both sides, but definitely much more pronounced on the broad market side. So we need to be aware of this. All right, so here's a look at the S&P divided by the TLT. This is that classic risk-on, risk-off measurement of the broad market versus the bonds. When this ratio is on the rise, that means traders are moving in favor of equities over bonds. When it's declining, it's the other way around. Right now, we're still kind of in the midst of this positive channel. So this is definitely something for the bulls to kind of have something to ruffle their feathers about and talk positively about. So for now, this is definitely a positive for the market. But if we start to roll one way or another, if we get too extreme and exceed this channel to the upside, we'll be looking for a return to the mean. At the same time, if we lose this channel to the downside, we'll want to start looking for more shorts as the market takes a more defensive posture. 10-day trend today recorded a close of 0.92, but the 10-day average did move down to 0.90. This 0.85 level here is our reversal threshold, and we are inching a little bit closer to that. And once we either tag that or break it, we're going to be looking for a more serious move to the downside here in the overall market. So this is something that we need to stay tuned for. All right, so here's a look at our major sectors ranked from best to worst. Computer hardware was top gun on the day, with a couple of earnings that came out today that definitely kind of set the table for that. The BTK was also very positive, definitely lifting and helping to support the overall NASDAQ market. The defense index was fairly strong, as well as in the pharmaceuticals, performed okay. Weakness on the day was found certainly in the gold and silver, which has been very, very volatile. Had a couple of real strong updays, and today obviously sharply lower, down 4.5%. The housing sector was very, very weak today, and is still trying to find a bottom here, down 2.5%. Also, the semiconductors, the SOX was down almost 2%, which is definitely cause for concern for the bulls, especially on the NASDAQ side. And after a good report by Apple, and then one from Broadcom that was not well received, is definitely something that needs to be worked out by the market. Here's a look at the SOX. A couple of key developments here today. We did follow through down below the 10 EMA, so this does qualify this now as a short-term downtrend. First support is going to come in at the 50 DMA at about 471.5. Next support is going to be 468.75. Resistance is going to be in the area of this 7/8 level here, or the prior high. Either one is going to be pretty effective if we get into that area. The other key development on this chart now is that we've seen this lower high recorded in the MACD, and we're also seeing this crossover here and this negative signal by the MACD. So we could definitely see some momentum develop to the downside. So be ready for that, and don't pass on shorts if you see any semiconductors coming up in your scans looking for shorts. Here's a look at the gold and silver index. This is the XAU. We did break out above the 50, had a follow-through day. Today we went down and used exactly the 50 DMA as support. So this 4/8 level is one of the three majors, the 0/8, the 4/8, and the 8/8. So this 100 level is going to be a key area here that we may need to gain. The MACD is trying to make the zero line break, so we could easily see some better upside here in the chart, and just might take a little while to develop, and that's fine. Okay, we talked about the BTK index and the relative strength. while it was relatively strong in the day, we had a pretty negative day the previous session, so today was actually just an inside candle. So what you really want to watch out for is the break and the resolution of this little mini range, which would be the range of the previous candle. So we're going to use 6 ace at 21.25 as the breakdown, and the breakout above that is going to be a cross above the high of this candle at 21.75. Okay, here's a look at oil. Oil closed below the 10 EMA and is threatening to follow through. This is today's candle actually, because this counts the glowback session. So we got to be on guard for this. If this follows through on a closing basis, we'll have the trend flip to short-term negative. If that does in fact happen, then this 4 ace level at 100 could come into play. Resistance overhead remains at 7 ace at 109, 375, and then big resistance and a trade 2 target for sure at 112.50 if trade can continue to the upside. The other development here is the MACD has crossed to the downside, which should put pressure and probably make the rallies sellable. Looking at the mini gold futures. Mini gold still gaming the 50 DMA. That's fine. A lot of times we see that the 50 and the 200 get gamed as the institutional players kind of probe each other on both sides to see who really wants to put some money to work. Very typical for the course. Usually the 50 DMA doesn't tend to get gamed quite as long as the 200, so I wouldn't expect this to last more than another 48 hours. All right, folks, as always, thanks for listening. This has been Rich for Tradesight.